That Morgan Stanley posted losses that were, as you just heard, greater than expected. That other giant that Margaret just referenced, Goldman Sachs, last week reported record earnings. So the House of Morgan, House of Goldman, they've been along the towering titans on the street. Is that era over? Let's turn to institutional investors. #1 ranked analyst for brokerages and asset managers, Brad Hintz of Sanford Bernstein. He's a former CFO of Lehman Brothers and was with Morgan Stanley for a decade. So, Brad, on a morning like this, you hear numbers like this. As an alum, as having worked there, do you feel like it's the end of an era? Is it now JP and Goldman versus Goldman and Morgan, or is this just a symptom of the crisis we're working at right now?
Well, these companies have remarkable writing capacity. If we look at Goldman Sachs is certainly the leading trading house on Wall Street, probably followed by JPM, Barclays, and then Morgan Stanley. Wow. And in a trading environment where we are today, Goldman's going to do extremely well. If we look at Morgan Stanley seems to be taking a different path here. They're changing their business model to a lower risk business model. They're pulling in their trading to a lower VAR type trading, flow trading, liquid parts of the marketplace, and betting on retail, and interestingly, betting on their investment banking side. So their investment banking side is perfectly fine, no weakness in terms of that. I think there's certainly a question, and the question is John making the same mistake that Stan O'Neill made in 2003, 2004, which is he held in his traders, said, don't take trading risk at this point. And as a result, he waited for the recovery of retail. So Merrill really didn't begin to start coining money until retail came back, and it came back really quite late in the cycle. If Morgan Stanley is making a bet on retail and not giving enough risk to its traders, it's not going to have that bridge to the recovery of retail. So when the comment that Margaret just made about Colm, Colm was saying we didn't give enough risk, and I noticed that the VAR on their fixed income trading actually dropped this quarter. That was really surprising to me.
But is the right question, is there enough risk? I mean, have we returned to an environment where risk will be rewarded? Because wasn't the lesson from the fall too much risk is going to hurt you in the long run?
You have hit on a very good point. The point is, when we see the other businesses begin to pick up, how much will the market pay for trading? Right now, trading's the only game in town. Trading looks pretty good relative to spread lending right now. But, when spread lending begins to come back, when these losses work their way through on the commercial banking side, will the market pay more for retail than trading?
That's
Morgan Stanley is the bet with Morgan Stanley. Exactly. Exactly.
So when you heard Margaret just mention her conversation with Morgan Stanley CFO, fixed income, that new hire, Jack DeMaio, is that fixing the problem? Is also the absorption of Smith Barney going to fix momentary trip here for Morgan Stanley?
Well, I was talking to some of the old retired Morgan Stanley partners, and the comment was, we're comfortable in terms of risk-taking because Kenny Durrett is the risk manager at Morgan Stanley. Durrett is a famous trader in the history of Morgan Stanley. So what what Mac is truly doing is he's looking for the best people. Remember, Wall Street, shoots their wounded, eats their young.
Right.
So as a result, this is one of, okay, it's time for one generation to move on. We're going to put a new trader in charge of the operation. The real issue is, if Mac gives them more balance sheet, gives them more VAR, they're going to generate more revenues. Right now, it appears that the reins are being held pretty tightly for the traders.
Okay, we've got to head to break, but I love having this conversation with you. Very quick question. Do you think that right now the bet for Mac is a safe one in terms of his own position, in terms of how Wall Street is going to reward shareholders right now, this level of risk?
We'll know about John Mac's legacy 2 years from now, after Mac is gone, which is, does retail play out? Because the integration is going to take that long.
All right. Thank you so much, Brad Hintz.